Joining us is Jonathan Williams, Chief Economist at American Legislative Exchange Council, or ALEC. It's a nonpartisan organization of state legislators, and they draft and share model legislation for distribution among state governments. Now, Jonathan, I was thinking maybe to start off, would you mind giving us a quick overview of the states that are cutting income taxes?
It's been a remarkable 2 years now, really, where we've seen nearly half of the states really reduce income tax rates on hardworking taxpayers across the board on individual income tax. And it's been a great development for states that want to make themselves more competitive, because right now, one of the biggest trends that we see is these historic budget surpluses that states see right now. And oftentimes you get the remark that, we've got so much money, we don't know what we're going to do with all of it. And that's somewhat terrifying, that we're going to see that much potential new spending just because there's so much surplus money sitting in the 50 state capitals. But to their credit, just this week, we saw West Virginia enact the largest tax cut in state history as Governor Justice signs that into law. We saw Utah this week cut taxes once again on personal income, reducing their income tax rates. But all said, it's been an incredible 2 years of tax cuts. We've seen a revolution across the states of the flat taxes, states deciding to get rid of their formerly progressive income tax codes and stop penalizing people for being more successful in their states, and stop penalizing small businesses. And so this has been, Washington, D.C., we can have a lot to say about that in another conversation in terms of just kind of the bad outcomes that we've seen with the historic inflation and the overspending. States are doing the right thing. They're balancing their budgets, and they're looking for ways to give this surplus, which after all, at the end of the day, is an over collection of tax revenue back to those who generated the tax revenue, and that's small businesses and individuals.
And as you mentioned, we've been seeing this for 2 years. I wonder, do you feel this is sort of a growing trend that states are cutting income taxes?
Well, absolutely. At ALEC, for the last 15 years, we've produced the report Rich States, Poor States, that really goes through and analyzes how states can be more competitive and what are the things that provide the biggest bang for the buck when it comes to states that are looking to do the right thing and cut taxes. And it turns out that all taxes matter, but not all taxes are created equally. And it turns out that, based on our research and the research of many others, that income taxes are the most damaging way to raise a dollar of revenue for your state or local government. And so we are very excited about this trend of states looking to cut taxes, but more importantly, looking to cut the right type of taxes. And, we're very excited looking ahead that North Dakota may be the next state to dramatically cut taxes. They're even talking about maybe getting a flat tax of 1.5%, which would be the lowest of any state with an income tax. And we're very proud of, let's say, the 9 states like Texas and Florida and Tennessee and 6 others that do without a personal income tax altogether. We think that's one of the most key things that states can do to be economically competitive, is don't tax personal income. There's a great success story with those states that do without. And I think it's very safe to say we'll be looking, whether it's Iowa, whether it's West Virginia, where they have triggers in law to continue to cut taxes based on the recent tax cuts, whether it's Utah, that's ranked number 1 in Rich States, Poor States for all 15 years in a row. There's going to be a competition across the states now for who will be the next state to do without their personal income tax and actually eliminate that. That's, I think, the next stage. We're seeing all these great tax cuts right now, but who will be the next state to eliminate their personal income tax? And I think there's a lot of states looking to vie for that right now as we speak.
No, it's interesting because Biden is talking about raising taxes on billionaires, that is. I wonder, we're seeing this trend, right? What's behind this trend? What's state governments seeing that's different from what Biden's doing?
Well, that's actually a great point, because that's one of the reasons as we talk to our ALEC state legislators who are leading the way on these tax cuts across the states. They're saying we need to provide a counterbalance to what's going on in Washington with taxes going up and proposals for even higher taxes, and just the out of control inflation and spending that we're seeing in Washington, especially out of this administration and out of the Senate. We're seeing a desire, I think, from the men and women who are leaders in the states to say we can only control what we have in front of us at the state level. But we must balance our budget, contrary to Washington, D.C. And secondly, if D.C. is going to be talking about higher taxes in the Biden administration, we need to be providing lower taxes and inflation protection for our hardworking constituents. That's the difference. D.C. is looking for bigger government solutions and doubling down on this spending problem that has led to the failure of inflation and 40-year highs. And the states are actually innovating. They're being these laboratories of democracy. And then we can all hope that we can learn a lesson here in Washington and take a page for what is working in the successful states that are looking to cut taxes and restrain spending.
It's interesting you mentioned inflation. I'm glad you mentioned that. Does cutting taxes help reduce inflation?
Well, absolutely. I mean, this is what we need is a supply side revolution that we saw in the Reagan era in the 1980s, when you saw Paul Volcker at the Federal Reserve obviously had to do some very painful things with reducing or with trying to get inflation under control and raising interest rates. But the, I think, under discussed element of the 1980s was the Reagan tax cuts that reduced taxes and actually aided productivity in the economy. And that's the thing. And I think there's an easy way of battling inflation and there's a hard way. The painful way of battling inflation is by raising rates and causing more crises in the housing market, as we've seen in many markets across the country, making it more expensive for small businesses to get a loan on new projects. Or there's the way that I think is the natural and the much less painful way of dealing with inflation, and that is enhancing productivity in America. And how do you do that? Through supply side tax cuts like the Reagan administration, the Trump tax cuts, the 2017 Tax Cuts and Jobs Act. Those all of the individual tax cuts of that reform go away automatically by 2025. There's got to be a real discussion here in Washington on what can we do to avoid that massive tax increase that would happen under the phase-out rules of that Trump tax cut of 2017. But at the end of the day, the states are controlling the policy that's in front of them and what they can control. And I think these efforts that you're seeing to enhance the supply side and productivity enhancing tax cuts at the state level are exactly the kind of reforms that we need to be talking about as a country to get inflation under control without that painful rate increase that we're going to continue to see otherwise from the Federal Reserve.
Now, let me just play devil's advocates for a moment, if you'll bear with me. Now, the inflation issue, many agree it's a supply or demand side problem. It's a supply or demand problem. So if we increase taxes, we make people poorer, they have less money to spend, that reduces demand. Wouldn't that lower inflation?
But it's the painful way to lower inflation. I mean, that's exactly kind of the two ways of getting to it. There's the way of reducing aggregate demand through Federal Reserve action or through some sort of a major tax increase or some way to tamp down Americans' buying power and aggregate demand. And that's the way that we shouldn't go about doing it, because you're going to harm millions upon millions of American individuals who have already been harmed by this historic inflation. That would be the double whammy of a big government solution to this type of a problem of inflation. The way to do that naturally through a free market reform would be exactly what we've been talking about through what's proven to work in the Reagan administration is enhance productivity of small businesses on Main Street, enhance the ability of individuals to have a better quality of life through keeping more of their hard-earned money. And then that's going to have the effect of obviously attacking inflation in a way that's meaningful, but in a way that doesn't cause new harm to hardworking Americans.
Do states expect lower tax revenue because of tax cuts?
Well, we're still seeing really historic revenue gains in many cases at states. Now, we're going to see a period of probably some storm clouds on the horizon, given the changing national economy and this attempt by the Federal Reserve to really tamp down aggregate demand to try to hit inflation that way. And so there are some concerning signs in out years as states look at forecasts. And as states cut taxes, I think some of the approaches that we've seen are you're going to see some revenue reduction from these tax cuts, and that's okay because you have surplus revenue right now. But in other ways, you're going to see states enhance in-migration to their states. You're going to see states have new business investment because of these tax cuts, and they're not going to lose the type of revenue that you might see on let's say, an official CBO type score here out of Washington, D.C. that doesn't take into consideration the changes of behavior that happens when you change incentives and make yourself more competitive. That's the idea. My co-author Arthur Laffer, who writes the Rich States Poor States report with us, and Steve Moore, is sometimes when you cut taxes, you don't lose dollar for dollar revenue because you have that enhanced economic growth and competitiveness. And that's what we see in the states, let's say, that go without personal income taxes. Texas, Florida, Tennessee, some of those big states have been some of the fastest growing states in America while avoiding the most damaging tax of all, the personal income tax.
So, Jonathan, just final thoughts. I know ALEC is a big proponent of federalism, and especially with Biden proposing raising taxes, it seems like this is a very good example. What are your thoughts on this?
Well, there is a very stark difference now in the type of governance that we see. Whether you're Republican, Democrat, Independent, Libertarian, Vegetarian, it doesn't matter what your political background now is. What you see out of Washington is they think what's out there is theirs, and they're going to take more of it because it's big government that their view controls everything in the economy and really has the purse strings at their disposal. What we're seeing at the state level is a much very different approach that I think empowers individuals. That says, you all are the drivers of tax revenue. We want to become more competitive. We want to live within our means, opposed to Washington, D.C. 49 out of the 50 states have a balanced budget requirement. That is one of the great differences of federalism. Washington, D.C. is broken when it comes to overspending. $31.5 trillion of national debt now is really the example that all of us know. And that's one of the drivers of inflation. At the state level, you see a much different really outlook at how to go about crafting a budget that empowers the taxpayer, returns money to them when you have a surplus, and looks for ways to cut taxes to become more competitive. The difference couldn't be wider in this current age, in this current environment of DC looking to grow government and states across the board looking at ways to shrinking government and empowering individuals.
All right, thank you very much, Jonathan. It was great talking to you today.
Thanks for having me.